What if I told you your profit problem isn't your pricing? It's your percentages. You're pouring your heart into jobs, bringing in consistent work, but somehow the bank account doesn't show it. The money's coming in and then going right back out.
In.
I've seen it firsthand. I work with one husband and wife contracting firm who completely missed one of these percentages, and it was literally costing them 100% of their profits. Your expenses are talking to you loudly.
Listen to me.
And if you know how to read them, they'll tell you exactly where your profit is hiding.
X marks the spot!
And before this video is through, I'll share the invisible profit killer so that you don't wake up wondering how you're both busy and broke at the same time.
Help me, I'm poor.
Welcome back to the Financially Savvy CEO, where numbers don't just tell stories, they tell the truth. Well, hey there. I'm Kimberly Ferguson, CEO and founder of The Emerald Edge. And at the Emerald Corner, we talk about money, mindset, and the systems that help you scale with confidence. Around here, we believe financial clarity isn't just smart business. It's your greatest strategy for freedom. Today, we're diving into one of my favorite profit levers, your expense percentages. I'll show you how to turn simple ratios into profit power. No complicated spreadsheets, no accountant speak. Just clear strategic insight that helps you stop wondering where the money went and start deciding where it goes next.
I'm ready.
The reality is that most contractors don't have a profit problem. They have a visibility problem. You're making money, sure, but typically most contractors don't actually know where it's going. You see deposits hit the bank and bills go out and hope there's something left over at the end of the month to pay yourself.
Hey, maybe someday, if you wish hard enough.
But unfortunately, hope isn't a financial strategy. That's where expense percentages come in. When you start looking at your business through the lens of ratios, how much of every dollar goes where, you stop reacting and start leading. You see patterns, you spot waste, you make smarter, faster decisions because your numbers actually make sense. And here's what's wild. Most businesses are only a few percentage points away from serious profitability.
Really? Really?
I've seen husband and wife teams increase profit margins from 10% to 55% by just shifting how they track and spend. That's not fluff. That's tens of thousands of dollars back in your pocket without working more hours or taking on extra jobs. So in this video, we're going to break it down into something simple. The 3 percentages every contractor couple should know. We'll look at how to calculate them, how to interpret them, and how to use them as a framework for growth.
Let's do this.
If one of you runs the jobs and the other one runs the office, well, you're both co-pilots in this business. And these 3 percentages are the dials on your financial dashboard. And if one of them is off, the whole plane starts shaking.
I'd say severe turbulence, definitely severe turbulence.
So first, labor is your biggest expense, and it deserves your full attention. So here's the formula. Take your total labor cost, divided by your total revenue, times that by 100. And if your labor cost is running over 35%, well, that's a red flag. When you see your crew's wages as a percentage of sales, you instantly know whether your pricing, staffing, or scheduling needs adjusting. If you're in the field, this number tells you if you're bidding smart. If you're managing the books, well, it tells you whether the jobs are actually profitable or just keeping everyone busy.
Everybody else just look busy.
This number is often the invisible profit killer. Overhead is everything that doesn't swing a hammer but still eats cash. Think insurance, software, fuel, phone bills, marketing, and the snacks that everyone swears they don't eat. Formula for this is total overhead divided by total revenue times 100. For most small contracting firms, 20 to 25% is pretty healthy. Higher than 30% though, and you're leaking profit somewhere. So the partner that handles the books can dig into recurring charges and vendor contracts, and while the one in the field keeps an eye on material, waste, and fuel. Together, you guys can attack the overhead from both sides. I actually had a client recently who was not even considering overhead in their pricing. Their jobs looked fantastic on paperwork, but when I dug into each one, I noticed one very important thing.
What happened?
Their overhead cost more per job than their profits for that job. Ouch.
Oh, that's gotta hurt.
I know they're not out there trying to pay customers to do work, and that's essentially what they were doing. So once we addressed that issue, we actually started seeing profits in their bank account and smiles on their faces.
I can't believe it took you this long to know.
So profit percentage equals your net profit divided by total revenue times 100. And for net profit, that's your revenue minus all of your expenses. This is the number that determines whether you're thriving or just surviving. It's like your business health score. A healthy contracting business should see 10, maybe even 20% profit after paying themselves a fair salary. If you're below that, your labor and your overhead are potentially eating too much of each dollar.
These numbers, they just don't add up.
Knowing your numbers is powerful, but using them is where the real money's made. So let's walk through how to use these percentages to maximize your profits. So when you start tracking these percentages monthly, you'll start to notice some patterns. And these patterns tell you what decisions to make next. So let's break it down.
Break it down.
So number one, let's use your labor percentages to adjust your pricing. If labor is creeping up month after month after month, that's not just the cost of doing business. It's a signal. Either your bids aren't high enough or your crew's efficiency is slipping. So to fix this, let's compare labor percentages across your last 5 jobs or so. If one's higher, find out why. Was it weather delays? Was it an incorrect estimate of hours? That's your cue to recalibrate future quotes. Or if you find out that efficiency is slipping, it's time to chat with your team. What is the issue? Are you working them too hard? Are there roadblocks on the job that are causing delays? Well, determine the issue, address it, and your team's efficiency will return.
All right, team, let's get it together. Come on.
So number 2 is let overhead percentages guide spending decisions. So your overhead percentage tells you how lean or bloated your business really is. So if it's climbing, you need to check subscriptions, recurring vendor costs, etc. One unnecessary $300 monthly payment adds $3,600 a year, and that's pure profit loss. So the fix, set a quarterly overhead audit date with your spouse. Pour some coffee, pull the statements, and cancel what's not serving you. You'd be shocked at how much lighter your business can run afterwards. And don't forget about those annual expenses. These can be real business killers, as we tend to just set and forget those. So don't forget to get updated quotes on your insurance, especially. Your current company may be charging you a premium just for staying put.
See, that's how they get you all these additional fees.
And number 3 is use your profit percentage to build predictability. So profit percentage isn't just a score, it's your business health tracker. So if your profit is consistent, even as revenue rises, that's a sign your business systems are scaling with you.
Follow me.
So if these are off, then the fix is to establish a baseline. So let's say 15%. When you dip below that, you don't panic, you investigate. Was it material costs? Was it overtime? Was it your pricing? Treat it like a dashboard warning light instead of a disaster alarm. And if that number isn't where you want it to pay yourself what you need, well, then definitely take a look at your pricing.
Okay, don't panic. You okay?
So number 4 is build a simple dashboard together. Here's where most contractor couples miss the mark. One of you knows the job and the other one is in the dark. One of you knows the numbers and the other one is flying blind. And that creates tension and missed opportunities. So once a week or even once a month, if that's too much, schedule a Marriage Sanity Monday. One of you brings the job updates, the other brings numbers. Together you review labor percentages, overhead percentages, and profit percentages, and then set one action for each. It keeps you both aligned, accountable, and confident, and helps to reduce the number of business-related discussions that you have each week, because you've already hashed everything out during your weekly meeting.
Sit down and figure this out.
And if you're ready to make these ratios your superpower, well, here are a few golden rules. First of all, automate your tracking. Use QuickBooks, Gusto, or a simple spreadsheet that calculates percentages automatically. Anchor to your value, not to your volume. Don't chase more jobs, chase better margins. Unless, of course, you're ready to scale. And in that case, chase better margins first, and then more jobs. And plan for your profit first. Treat it like a non-negotiable bill your business owes you. Your marriage and your sanity will thank you.
Oh, thank you. Thank you, thank you, thank you.
The hard truth is that numbers don't lie, but they will whisper before they scream.
Whispers.
So when you know labor, overhead, and profit percentages, you can spot the whispers early, before cash flow dips, before stress spikes, and before another sleepless night over payroll. You and your spouse didn't build this business to just survive job to job. You built it to thrive, to have choices, to have freedom, and to have peace. And that starts with understanding where every dollar goes and how to make each one work harder for you. And if you're ready to take the guesswork out of profitability, it's time to get a clear, professional look under the hood. At the Emerald Edge, our profit strategy call is designed specifically for contractor couples who are ready to stop guessing and start scaling with intention. So here's how that works. You'll meet one-on-one with one of our CFO advisors at no cost to you. We'll walk through your real numbers, identify where profit is leaking, and walk you through how we can reclaim it together. Because at the end of the day, you don't need more jobs. You need more margin.
Let me drop some knowledge on you.
This has been The Financially Savvy CEO, where spreadsheets are secretly sexy, numbers pack more punch than your double espresso, and every decision builds not just a business, but a legacy. Stay sharp, stay strategic, and I'll see you in my next video.